Raimi Inocencio is here with a cargo craze to beat the clock. Raimi.
Sherry, yeah, thank you. You know, just imagine crossing the Pacific right now. Our Air China planes, just like this, full of cargo, along with South Korean ships from Hyundai, crossing the Pacific as well with freight just full of Chinese-made goods trying to get their way by September 24th, by Monday, or possibly if they don't make that, and very likely if they've just started, they probably won't, trying to get there by the turn of the new year. Now, this, of course, is all related to Trump's tariffs, the $200 billion that we have been reporting all this week. It's really interesting. Hop into the Bloomberg terminal because all the goods that we were talking about here can really be seen in the ECTR function of the Bloomberg terminal. I've set this to the United States, and these are the imports by country. China here, we know a little bit more than $500 billion. It's really interesting because all the consumer goods that we're talking about here that could be impacted are actually about 25% of these total imports here, coming in at about $150, $160 billion. Let's go and flip up the screen here, and I want to show you the bar chart really for the breakdown of the stuff that is made in China that could be impacted. So cell phones and other household goods, obviously one of the biggest here on the chart, really. $70 billion is their worth. Toys, games, sporting goods also from China coming in at about $25 billion. Again, all told, $150 billion, $160 billion out of that $505 billion in terms of imports coming into the United States. So a lot of numbers, a lot of value are at stake here. And really, if I was likening it earlier to if China was sort of like Santa's workshop, which it sort of is when you're going ahead to the holiday season here on December 25th, of course. If China, if Beijing could say it's time to hurry up, it's time to get going, he'd be saying to all those elves, you better get cracking before the deadline hits by the end of this year.
Yeah, literally Santa's workshop. If you've ever seen pictures of those factories and the shops in Yiwu that sell all the Christmas trees and decorations and whatnot. Raimi, this really does go a long way to explain why the ports along the US West Coast have been so busy lately. In August, we actually saw record imports arriving at the Port of Oakland. Yeah,
really, that is the general trend. Follow me along this way, because not just the Port of Oakland, the Port of Los Angeles, really the ports all along the US West Coast are seeing this big jump in terms of volume, in terms of the goods that are arriving from China. Right behind me, this is some video of the Port of Los Angeles, which is the biggest U.S. port. Now, what's interesting also is that while we're seeing all these volumes rise, of course, that does demand a premium in terms of getting them over there. Hop back into the Bloomberg terminal, please, and I want to show you the freight charges going from Asia to the United States, specifically from Shanghai to Los Angeles. That's in white. Meantime, the Shanghai to Rotterdam route, in terms of the rates, are actually falling. You can see here right now we're almost nearing $2,400. This is for a 40-foot container, Heidi. Even just a few months ago in July, it was just at the $1,600 mark. In fact, the $2,400 mark for this container is actually at its highest ever since December 2014. And we can really see that divergence. That's all of the efforts, all of the goods, all of the energy right now as we race towards the end of this year, towards those Trump tariffs coming online, that this divergence could very well continue.
Walmart warning that President Trump's tariffs on Chinese imports could raise prices on its products. Our next guest has been opposed to these tariffs right from the get-go. He's always arguing with me. Joining us now, Americans for Prosperity President Tim Phillips. I guess you're going to say, case closed, 15 love, prices are going up, tariffs are bad.
Shockingly, prices are going up on American consumers. The other side knows it, and in several of these states where there are hot Senate races, liberals are on the air attacking Republicans because of the farmers being hurt in North Dakota and in Missouri. These tariffs are a bad thing. The president has done so much good, and these tax cuts, one reason this market's at highs. I think we can agree on that for sure. The tax cuts and the regulatory,
yes.
the deregulation and knocking down barriers to job creation. It's been amazing what this administration, with some help from Congress, has done. But they're risking undermining it, Stuart, with these tariffs.
But let me throw this at you, and I've said this before. The tariff situation, put it like that, is hurting China much more that it's hurting us. Their economy really is slowing down big time. Their stock market is down significantly. Our economy growing at 4%, our market setting records. We're in a very strong position to exert power in this trade relationship with China.
It's early in this trade war, and long-term history tells us it doesn't end well, and it doesn't end well for anyone. Walmart is right. Prices are going to be going up on consumers across the board. Food, everyday personal items you use, and that hits the folks on fixed incomes. My parents are on fixed incomes. I think about them. And it does hurt, and it's early in this trade war.
But what are you going to do? I mean, the die is cast. The president has embarked on a tariff policy against China. But he can't just withdraw it all of a sudden. What do you want him to do? Cave?
It's not about caving or who's the big tough guy or the tough country.
But what do you want him to do?
It's about continuing this prosperity run that his policies are largely responsible for. So the best thing to do is to say, you know what? We've won. Declare some kind of victory and move on.
So
he did it with the European Union.
You want him to cave.
He claimed.
You want him to cave.
What is it about this caving thing? I want American consumers to have prices that are lower.
We've won and withdrawing the tariffs. That's caving.
We're not winning with these tariffs, Stuart. They hurt everyone, including American businesses and farmers and consumers. And by the way, the steel tariffs, they're hurting a lot of companies. And do you really want the government in the position of picking winners and losers? We're going to let the steel guys, they're going to be a winner under our policy, but we're going to hurt these other guys who need steel and aluminum in their products because they're going to have to pay higher prices. That's not what we're about. We're about freer markets.
But I'd really like to see the Chinese stop stealing our intellectual property and stop forcibly grabbing our technology. How are you going to do that? The only way to do it is with tariffs or some other punishment of China. That's a trade war. You can't escape it.
Now, look, you don't have to have a trade war with tariffs and protectionism that hurts American farmers, businesses, consumers, and really the whole world, but especially Americans. We're Americans for prosperity, Stuart. We want prosperity long-term for every American.
Okay,
and
let me ask you this.
Protectionism hurts.
Forgive me for interrupting you, and I know I'm doing it far too often.
It's your show. So.
Yeah, but I am interrupting. I'm very sorry about that. But look, what would you do? They are stealing our intellectual property, and they've been doing it for a generation. They're forcibly grabbing our technology and using it for themselves and not paying for it. What would you do? How would you stop that?
That's a separate issue
but how would you stop
tariffs. First of all, I would say to American companies, eyes wide open before you go in. Make sure you understand what they're going to do if you take your products and you take your businesses into China. Eyes wide open. Make sure you understand the IP.
And nothing happens.
Intellectual property is in trouble.
It. You don't have a policy to knock them off.
You've asked me. Let me ask you one question. Do you think over the last 20 years that trade with China has enhanced Americans?
Yes.
Bingo. That's what trade does. It enhances across the board. It's never perfect. We don't live in a perfect world.
We can change the trading relationship so they quit stealing our stuff.
But the way you do that is not to shut everything down and say, we're going to wall off everything and not trade with you anymore until we have the perfect agreement.
All right. Look, we're out of,
We're not going to talk about the ads we're doing, Stuart.
I can't. I've got no time. I was arguing with you too much. But come back again.
Yes, sir.
I do kind of enjoy it. And bring your son with you, okay?
Cabot is great. You got to have him back. You're always nice to him, Stuart.
That's true, actually. I like him. Tim, you're all right. Thanks, sir.
Here now, John Hilsenrath, Wall Street Journal Global Economics editor. John, he is, I love the cheat sheet that he was using. That was certainly a moment. But he's right. This economy is extremely healthy and in some ways getting healthier.
Yeah, I mean, I guess I would say he's mostly right. I mean, the strongest in history, you could have a debate about that. But it's true. GDP growth has picked up on a year-over-year basis, about 3% a year. It was a little more than 2% for most of this expansion. Unemployment is very low. Inflation is right at the Federal Reserve's target. I mean, I've been saying this for a while now. We're in a sweet spot for this economy, and the big question is how long can we keep it going? But right now, this is a very strong economy, very strong job market, very strong growth.
Should we worry about what the Federal Reserve does with the meeting coming up next week, John, that they overshoot? Because it seems like the way the bond market was reacting this week, where you had longer-term yields going up a little bit north of that 3% mark, that it seemed to be sending, the bond market was, that they don't think the Fed is really going to overshoot and slow or damage the economy at this point.
Well, you know, I think the Fed is, we've pretty much priced in 2 more Fed rate increases this year, one next week, as you say, and then another one probably in December. You know, I actually think the stock market could be primed for a rally going into next year, because the Fed has got to be looking at this bond market that you talk about, a 3% yield, and asking itself, well, how much further do we have to go raising interest rates? You know, they're going to be a little over 2% next week. They don't want to raise short-term interest rates so much that short-term interest rates are higher than long-term interest rates. That's something called an inverted yield curve, and that sometimes signals a recession. And there are some people at the Fed who are saying that they might be able to slow down these rate increases if that looks like we're getting to that point of an inverted yield curve. If the Fed signals that it's going to stop raising interest rates, the stock market goes through the roof, I think.
Hey, good morning, John. This is Morgan. A lot of the talk, of course, is on tariffs and what's going to happen in this trade war between the U.S. and China. But interestingly, yesterday, the U.S. government actually imposed sanctions on China for buying Russian military equipment. The Chinese are livid over that this morning. So give us a little forecast of what you think is going to happen, what we can see between now and Election Day as it relates to not only the tariff side of China, but what we're seeing on sanctions now.
Well, I mean, on the sanctions front, you know, this president certainly sees American economic muscle as one of his weapons in the global diplomacy realm, and you know, he has been using sanctions against the Russians, you know, including for poisoning these British diplomats. He's been using sanctions against the Iranians and now the Chinese, and I think we could see more of that. On the tariff front, you know, again, it's an example of the president using American economic muscle to have its way on the political and economic fronts. You know, we just got another $200 billion of tariffs against the Chinese, and all signals are that he's going to go and extend those tariffs to basically every import that the United States makes against the Chinese. We should be clear, a tariff is a tax. It's a tax on American imports, and it looks like we're going to be getting more of that.
And on that note, John, Walmart issued a warning. The retail giant yesterday said it may be hiking prices on certain products with this trade spat with China. And this, of course, as you mentioned, comes after these new tariffs on this $200 billion worth of Chinese goods. There's about roughly half of our imports from China right now have new tariffs on them. And Walmart issued this warning in a letter to the trade rep, Robert Lighthizer, about these price hikes. Do you think that there's a broad headwind for the stock market, or do we need to be careful, or even the economy? Do we need to really watch specific stocks on this note of like how individual companies might be hurt by this?
Well, so I'll say two things, one about the stock market and one about Walmart. So as far as the stock market goes, you know, with the rally that we've seen this week, it looks like the stock market investors are now at a point where they've priced in a lot of the tariffs that have been imposed, and they're looking past what we're doing on the tariff front. I think as it relates to China, the market is probably starting to price in some good news on a deal with Canada and Mexico on the NAFTA front, you know, possibly with the Europeans on steel and autos. So, you know, again, I think the stock market is kind of primed to rally on any good news on the tariff front. We've been talking about tariffs so much.
Right.
There's a lot of bad news already priced in there. As far as Walmart goes, you know, Walmart you could look at as China's little embassies all over the United States. China is the critical, central supplier of everything that we buy in a Walmart. You know, that's been a bargain for American consumers for a couple of decades. It meant we've got a lot of cheap goods, especially going to low and middle income households. And if we slap tariffs on a lot of what we're importing from the Chinese, that's going to hit Walmart as hard as anyone, I think.
John, that's an incredible point that you're making. But again, I want to raise this before we move on to one final thing. It's almost because the president likes to brag about how much money is coming into the Treasury Department from these tariffs. And this is my own crackpot theory, just bear with me a little bit, that it's like he's taxing these emerging markets as a way to raise revenue, because he is focused on actually at least trying to pay down some of the debt and take a hatchet to some of the deficit. And it's as if he says, hey, I want to raise revenue, let's tax these nations who aren't treating us very well, rather than, say, raising income taxes here in the United States in some way.
Well, so let me say two things. One about revenue, and then the other about this idea of taxing emerging markets. On the revenue front, excise tax revenues have picked up a little bit, but they are a tiny, tiny fraction of the revenue that the United States government brings in. The president has tweeted that we're going to pay off the debt with the tariff revenues that were coming in. That's just not true at this point in time. You know, our deficits are rising. We're looking at trillion-dollar deficits within a couple of years. That's probably the biggest risk to the economic outlook, is how big these deficits are getting. So we would have to increase tariffs by a heck of a lot more for that to have any kind of impact on the deficits, no less the debt. In terms of who we're taxing with these tariffs, you know, it does hit foreign exporters to the U.S. to the extent that it affects their profit margins, but it's also taxing American consumers and American businesses, because those tariffs get put on at our borders and get passed on to consumers. The Walmart case is a perfect example of how the tariff gets passed on to an American consumer. So it's not just emerging economies themselves, it's Americans back home.